Hello, today is Saturday. It is 8:26. Actually, I had some issues with the vocal on the last recording, so I got to do it over again. So sorry about that. Here's the deal. The week was relatively flat until we basically went sideways for most of the week and had a nice little rally into close. Again, after a big move, sideways movement, a lot of times that leads to good things. So early this week, we had about 85% invested, and on two gap ups, which I can show this to you, on two gap ups, we actually took gains. So overnight movement, big gap up higher, we took gains on each time. So into Thursday and Friday, we were 53% invested. So it went from 85 to 53. And then on Friday, on a nice little dip, we finally had a dip overnight, and I'm like, if we finally get an overnight session where we go lower, I think it'll induce some more buying, and it did occur, especially later in the day. It didn't happen until the last 15 minutes. So again, this market is very strong. It's hard to ignore that. Are we a little hot in some areas? Probably more than a little hot in some areas, to be honest with you. But the S&P 500, as you can see here, is not overbought yet. Now this is short term, so yes, it's going to show the 84.95 because of the recent rally in the end of the day. So this is a 5-day. The point that I want to kind of express here is these are the key levels we were watching, and if you're not sure what ES stands for, it's basically the S&P 500 futures. Okay, so if you're a client of mine didn't know that, it's the S&P 500 futures. So these are the levels that I was watching all week. And as you can see, it bounced off these levels, almost tested again. Futures actually did touch here again. This is the S&P 500, not ES. So these were the futures that I was watching. I basically said if we can hold 3880, which Thursday was a little bit rocky because we had a Fed meeting and we had a bunch of gap ups. So people were just simply taking profits into something, it's just not great risk reward going into a Fed meeting, even though we know nothing's going to change in the Fed meeting. But as of late, Fed meetings have caused some volatility, but the move has been up, period. So in short, we basically said, hey, here's kind of the tipping point. If we go below that, we're probably going to test 3880. If we stay above there, which it did look midday Friday, we did test near these levels and held, which was very, very good, and buying into the close. So in short, yes, we understand, like if we're looking at a more longer term perspective, I shouldn't even say longer term, but a 6-month perspective, you can see the RSI is 66. So sideways movement calms down the relative strength index. So you can see most of the week was pretty flat. It ended up being an okay week, about 1.5% for the indexes. We actually did very, very well this week. I wouldn't say very, very well, but we managed risk well and still beat the market. So in my mind, when things are close to overbought, this is how I want to trade. So we did add some into the close as we stated, but this is basically just to show you. Beginning of February, there was profit taking. We got very close to the 8-day, the blue line, touching and almost crossing the goldish line, which is the 21-day. When those cross, usually bad things happen. Did not cross, but it was still not a fun period. Just kind of showing you in general what that move will look like. Put call ratio is still very complacent. However, it's kind of an environment where I kind of understand that the Fed is pumping money in and continues to say they're going to support the economy. It's hard to be bearish during those scenarios. As we've talked previously, poor job reports usually means a good market. I know it's counterintuitive, but it's just the reality. So you can go against what history has told us. And again, it doesn't work every time, but usually the moves happen overnight. So on any gap up overnight, I'm often going to take some gains because I know the history of this. I mean, it's unbelievable. A lot of people don't even know this. So if you're a day trader and don't hold overnight, I think you're missing out on most of the gains. And this has been living proof. And don't get me wrong, there's a million ways to make money in the market. It's just, I believe you got to hold overnight, because history has told us, listen, look at the difference since 1993. The difference of buying the open and selling at the close, which is just true day trading and selling everything by the end of the day. The performance versus buy the close and sell the open. I mean, just a slight difference there. So you have to understand that most of the moves do happen overnight. It doesn't mean you can't make money day trading. In fact, I've done very, very well this week scalping. So it's just basically on RSI levels and knowing the market is close to being cooked. I think there's some opportunities. We bought into some names that we believe have opportunity, names that we're basing that took a little bit of a hit this week. So we decided to buy those names, and we'll show those to you shortly. But put call ratio, anything below 45 is a little complacent. We got down to 37 this week, and it's just a very strong market, we'll put it that way. So it doesn't surprise me that we're still in this range. Will it lead to a sell-off eventually? Sure it will. The normal pullbacks of 5 to 10% are going to likely happen this year, which shock me if it doesn't. But I'm going to take advantage of the period that we're in. And if good names take a breather, which they're going to, because somebody's going to want to take profits, those are the names that I've done well in buying. Okay. Now the VIX, short term. See what this one shows. This is just showing you the fear index. This gap right here, you can see between these two candles. This has been a tough area for us to break. We did close below 20, which is fantastic. Could it go lower? I think it probably does. It might need some time to base again to build more power to break through, but it's been trying several times, and I think we're getting close to a period where this could lead to very good things. So not to be uber bullish, but this is a reality, something we got to pay attention to. And I'll show you kind of the agenda. Sorry about this. The VIX, as you can see, this is that same gap, this gap that we were talking about. It's right below 20. Usually good things happen. So I'm showing you and indicating with the pink lines here where the VIX spiked and what happened to the market after those spikes. So clearly very good things. And we just had a recent spike again in the VIX. So it doesn't surprise me to see good price action after a huge dip like that, or a huge pop like that in the VIX, or a big dip in the S&P 500. So you can see the RSI is at a 42. So can it go lower? Absolutely. And could we be in another one of these periods where it was like a 2008, 2009, which many people are comparing to? Look what happens when we finally got out of that period. And very, very good things. Yes, you're going to see pullbacks, but that's a very good period for the market. So a lot of people do believe this is the start of a new bull market. I have a hard time believing that that's not true. I think it's actually factual, but I think we're getting a little bit stretched here. So 3 to 5% dip at some point will probably happen, maybe even a 10% coming in the next couple months. But in short, we're playing right now with about 76, 78% invested. We were 53% invested on Friday, added on Friday, that paid off. So again, that, like I was saying on social media, it was good to see a gap down on a Friday because it would induce buyers, and that's exactly what happened. So we'll take that. Treasury Yield still going higher, not bad for banks, but we've talked about this, and our group with Christian Frommertz has been talking about this. Usually into an election, it usually rallies, and it has continued, and this is not a bad thing for banks. We have KCE on, and we have Ally on for those trades, so feel pretty good about that trade. Might have a little more legs left, not sure how much, but mid and long term definitely higher, but short term getting a little cooked. Percentage of stocks over the 200-day moving average and the S&P 500. Again, you're seeing we're at heightened levels. I see the warnings. I'm very well aware of them. I'm just basically saying Short term, I'm hoping for another gap up and we'll reduce exposure again. The NAAIM, National Association of Active Investment Managers, you can see 110% invested. That's a warning flag, well aware of it, but we are just getting breakouts in a lot of names that I want to continue holding into this point. So I'm okay with the risk exposure that I have on. I'm not trading in any crazy names nor any penny stocks. So I'm not doing anything crazy at this point with 76, 78% invested. The McClellan Index, this is exactly what you want to see. If you see on the far right side, the black line, the actual index itself, crossing the 10-day moving average, this is a good thing. We're finally starting to come back up in the right direction. It was a little concerning when this was going down and the market was still going up. That's not what you want to see. So this finally is getting a turn up, which is good. Another perspective of that, a little more long-term. Actually shorter term, but it's just clear. You can see this can definitely go higher. Yeah, I would like to see it go higher, but this turn here is not a bad thing whatsoever. So we're seeing some good things. Some of the names that we added near the close before there was an actual rally was seeing good price action in a lot of these names. And as you can see, a lot of these names, and I'll show you the example, like these are not at the highs, okay? These are great momentum names that took a little bit of a beating this week and finally started to see a little comeback. So I'm hoping for some continuation in this little curl here. A lot of names are that way. So FUBO, which is a very popular one, took a breather this week and testing the 20-day moving average. And if it goes below the 20-day, I'm going to stop out. But overall, I think that this very well, if the market is strong next week, I think we have a really good chance of this going higher. So just kind of give you some rationale behind the moves. I'm not buying into names that are very, very high, but we had some really nice winners this week in CrowdStrike, Chewy, NVIDIA. So we were in a lot of really good names. So in short, I want to participate, but I'm not going to participate with 100% invested. I get more allocated during times on big dips. And sure, I think we'll probably see one soon. But at this time, the market looks very strong. The VIX just pierced 20, went below 20. We'll see if it can stay below there and fill that gap. So overall, I like what I'm seeing. It's great price action. We had basically a full week of sideways movement. Thursday was a little volatile with the Fed meeting, which is very traditional. It held 38.80. And that's exactly what I wanted to see happen. I wanted to see that test, and it was quickly bought. And through the week, we consolidated sideways. And on Friday, it finally said, we're going to break out the 38.25 in futures. So very strong week for us. And we really weren't taking a ton of risk either. Most of the week beyond Monday, we were 85% invested and then reduced down to 52, 53%. And did very well, beat the market just because we reduced positions on the gap ups. That's exactly what I want to do. Again, the moves happen overnight. So in general, I'm going to follow that theme and take gains if I have big gains at the open. So I hope that helps. Have a great week. Remember, guys, that for the guys that watch this, that it is Valentine's Day. So do something good for your wives. My wife, if you know her well enough, made sure that I remember that is this weekend. If you know Mandy, she will definitely remind me, and I thank you for that. So it was a great week for us. It doesn't happen every week. We're not taking a ton of risk at this point, but we want to participate. So we're taking risks where we believe good setups are. I think the backdrop remains incredibly strong for the market, but it's going to come with 5-10% dips, period. And those are going to feel brutal because a lot of people are getting into names that are highly volatile. So a 5-10% dip in the market equals a 20% dip in these names. It's a reality. So we're very realistic in saying we know things are in many areas are overbought. I'm very impressed with the price action in China, but understand that those areas have been in a consolidation and haven't even touched levels that it's seen in a decade. So I like breakout plays, okay? Those are names that I really like. Now, are they a little bit hot? Yeah, it wouldn't surprise me to see a little breakdown short term and then push higher in the emerging markets world. But price action is strong. If you see anybody that denies that they're not watching price action. Are we a bit over, a little extreme? Probably. But right now, the S&P 500, as I will show you, is at I believe, a 66 right there. Yeah. So a 66 RSI. 70 gets us a little concerned. I'm hoping for a blow off top similar to this period. We'll see what happens here. So this sideways movement that we had pretty much the entire week until the very end, I don't think is a bad thing at all. So if we gap up hard, keyword hard Monday, I back and reduce again. Okay. So love where we stand. I'm buying into good risk reward plays. But I'm also going to make sure I'm not going to get killed on any downfall it's likely to occur at some point. So hope that helps. Thanks for your trust. Remember, guys, it's Valentine's Day. Have a great weekend. And remember, to the market, it's closed Monday. I'm not going to lie. I need it bad. And I'm sure many people who are trading do as well. So I'm getting off the screens. I'm going to go ice skating. There are not many advantages of Ohio, and we haven't been able to ice skate much the previous years because it's been pretty warm. But we are going to go ice skating and play some hockey. Pray I survive and don't kill myself. Thanks, guys. Have a great weekend.